Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the Chapter 6, the short exercises, and we left off with problem 8 in the last video, so we're on number 9 now. And let's see, it says here, the following situations suggest a strength or weakness in internal control. Okay, so strength or weakness. Identify each strength or weakness and give the reason for your answer. Right, so A, all employees must take at least 5 consecutive days off for each year. Okay, that's a strength, and I talked about that in the last exercise. Let's see here, yeah, for number 7, 6-7 here, with the mandatory vacations. The solution says when employees on vacation, errors or irregularities may be detected by the individual filling in for the employee who was on vacation. That is true. But also too, by having vacations, the person may get burned out if they have to take the time off. They're able to keep their energy levels higher. They're, not like burned out, and they don't have as much pressure. They're able to deal with the pressure a lot better. Okay, so those are just a couple of extra things in addition to someone filling in and being able to spot their errors that they've made. Right. B, the accounting department orders merchandise and approves invoices for payment. Okay, that's a weakness. The solution says the accounting department should not be allowed to order merchandise and approve payment. The accountant could have goods sent to his or her home and approve payments for the goods, which is true. We're talking about a separation of duties here. Okay. The accounting department should not order merchandise. That's up to the managers to order the merchandise. Okay. I mean, it's up to the accounting department to pay for the, invoices, but they're ordering something. Does it happen? Well, when we're talking about merchandise, we're talking about like inventory, okay, that you're going to resell. I mean, the accounting department, let's say they're ordering office supplies for a hotel, okay. Well, obviously they're going to order office supplies for themselves in the accounting department. The copy paper, uh, you know, printer paper, pens, pencils, whatever. Okay, so they're buying it for the whole, operation, the whole business, and that to a certain extent is fine, as long as they have somebody overseeing that and they control that as an inventory. But let's say you sell widgets. It's not up to the accounting department to order widgets. It's up to the managers, the business managers, the people who oversee the operations to order the merchandise, and then have the accounting department actually pay for them. So that's a weakness. C, cash received over the counter is controlled by the sales clerk, who rings up the sale and places the cash in the register. The daily sales are recorded in the accounting records by the accounting department. Okay, that's a strength, right? Why? Because there is a separation of duties. I mean, a cashier or sales clerk, think about the grocery store, okay? They have their cash register, they're making sales and they're putting money into the register, okay? And they also have to be ringing it up on the register, okay? It is easy to spot somebody who's not ringing up somebody's groceries, okay, and just letting them walk out the door. So, they're punching the cash register, and at the end of the day, the tape has to match what's in their drawer, okay? And if the cashier, sales clerk controls all of that, then they could just pocket whatever they want. But if they have to turn it over to the accounting department, there's a separation of duty, and the accounting department can check to make sure that everything is on the square, on the up and up. All right, D, the officer who signs the checks need not examine the payment packet because he's confident the amounts are correct. Well, obviously that's a weakness, okay? Because if he's not looking, then he's not doing his job, period. Um, and anybody who catches wind of that, I mean, sure, on their part, um, they're taking a huge chance because just one day, that officer just might happen to look. Okay, so it's a little bit unlikely that they're going to not include what they need to include. But that officer is just not doing his job. It's his responsibility to perform his function in that separation of duties. Okay, 610. Identify the missing internal control in the following situations. Select from these activities: proper authorization, separation of duties, or adequate documents and records. While reviewing the records of discount drug, you find that the same employee orders merchandise and approves invoices for payment. Obviously the same employee shouldn't be ordering the merchandise and shouldn't be approving the invoices for payment. So this is a separation of duty. Separation of duty. Business is slow at Playtime Amusement Park on Tuesday, Wednesday, and Thursday nights. To reduce expenses, the owner decides not to use a ticket taker on those nights. The ticket seller is told to keep the tickets as a record of the number sold. Okay. Because there's a ticket taker and a ticket seller, okay, that is a separation of duty. By not having the ticket taker, now we're having the ticket seller performing both functions, so there's a loss of that separation of duty. Right? And of course, the ticket seller, they don't have to record the sale of the ticket, and they can just pocket that cash. Right? When business is brisk, ShopMart does not give customers a written receipt unless they ask for it. That is just adequate documents and records. Documents and records. Um, you know, Whenever a sale is made, a receipt should be given. Be created. Uh, you know, to take the policy of saying, oh, don't give them unless they ask for it. That's just not creating proper documentation. Okay. And of course, then that leads more to fraud and embezzlement. I mean, if you're not creating receipts, you only have $35 in total receipts, but yet you have $100 in cash in your pocket. It's very easy to skim off the top. Okay, but and then of course that also leads to the idea of separation of duty. Um, who's doing what, and uh, are they in collusion? Okay, all right. Lynn has worked for Watkins Electric Supply for more than 12 years. Due to her length of employment, she has been allowed to grant sales returns at her discretion. Okay, that is a lack of proper authorization. Just because she's been employed for 12 years, that doesn't give her, the right to be able to grant sales returns at her discretion. If there's that separation of duties and the proper channels, she needs to, go to whoever it is that is allows for the returns at her discretion. I mean, she's, let's just say she's a sales clerk. Okay, well, she can't, just like her friends could come in and want a return and and never actually bring the product back. You know, but if she has every return that comes in, if she has to run it by a manager, now then something like that doesn't happen. So you have to have proper authorization, regardless of excuses like or rationalizations like length of employment. Right? E, at a grocery store, the manager decided to reduce paperwork. He eliminates the requirement that the receiving department prepare a receiving report. Obviously, that's adequate document and records. Okay. Um, you know, eliminating the requirement for preparing or receiving a report, that's just not acceptable. Um, just because you want to reduce paperwork. The whole idea behind paperwork is to record any and all transactions that occur in a business. That's the fundamental, that's a fundamental principle of accounting. It's the basis for being able to judge what is actually happening in your business. By just saying I don't want to do paperwork, then you have no control over the business whatsoever. Okay, let's see here. That's 10. Let me see if okay. Yeah, I'm going to stop here and pick up with number 11 in the next video.